Let me welcome Uday Kotak to give the keynote address. While introducing him, I can talk about the bank and all that he has achieved. I will just say one thing, that he is the pole star of governance, and we kind of turn to him and talk to him, not because he talks about it a lot, but because he practices governance, and which is why I'm very honored and very delighted to have Uday come and give you all the keynote address today. With that, let me hand over the microphone to Uday. Thank you, Uday. Over to you.
Thank you, Amit. And first of all, compliments to you and your firm for leading the charge on governance and sustainability, even as we celebrate entrepreneurship in every which way. And for me, actually, I have a very interesting situation where we today as a firm have the privilege of leading many new entrepreneurs do that journey from the private markets into the public markets. And we are seeing a very significant flow of that as I speak with you on the one hand. And on the other, my own journey as a startup entrepreneur once upon a time. And very often the new age entrepreneurs ask me about how I feel about this journey and what are the lessons which are important, or which learnings which are important, which I have kept in mind in this journey from a startup to a sustainable enterprise, and what are the risks and opportunities along the way. And it takes me back to November 1985, when this startup was born. 21st November 1985 is a startup called Kotak Capital Management, which got born. And with very little capital in the bag, we went out to raise capital. And another interesting fact, Amit, is 27th November 1985 is when I got married. And that's the time I got my first venture investor in a way, which is Anand Mahindra. And once I was back from my honeymoon, we went out to raise capital. And we raised a princely sum of 30 lakhs as capital. I tried to keep as much as I could out of that for what I could hold. And then the balance was raised, and it was virtually anyone who wanted to come in and take capital, anyone who I had known was welcome. So that was my first foray into raising capital. And you can call it round one, round two, round zero, whatever you want in the modern terminology. But that was my first foray of going out and raising capital. And one of the important aspects, Amit, even at that point of time, is a recognition that we need to run this firm for the benefit of all the stakeholders, and not have a concept of conflict between the promoters and the non-promoters in terms of how you build your business. And at the same time, we wanted to make sure we had complete independence in how we went about building our business. But another critical aspect is the importance of the rule of law and process. I was fortunate at that stage to have a mentor called Mr. Sidney Pinto, whose history is he started merchant banking in India at ANZ Grindlays. And before that, he was company secretary, ICI UK Paints, and a lawyer by profession. So our memorandum and articles and every other process was put in place by him to ensure that whatever we did was within the framework of law. And I think this is an extremely important point, because in the early stages, the startups have the need for being aggressive, but being aggressive is consistent with following the law. So we started with a concept of discounting of bills. Till that time, no one in India used to discount bills, that is buy and sell bills in the private sector. It was an activity which was done by a bank. So we had it examined under law and under RBI regulations, And this was a perfectly legitimate activity, but nobody had tried it. So we started buying bills of exchange, selling bills of exchange within the framework of law, but in a very entrepreneurial and an aggressive manner. And it worked. So first important learning for startups is we can be aggressive, we can experiment, but we need to ensure that we are within the four corners of law. Then comes the next important lesson which we learned, which was about while we are innovating, how are we building sustainable business? So we started a car finance business. In those days, cars were in short supply. So we went out and booked cars with Maruti and were able to offer our customers immediate cars, provided they took financing from us. And we competed out with a major competitor at that stage, which was a Citibank. Again, entrepreneurial, out of the box, but perfectly within the law. And then in 1992, at the peak of the markets, we became a listed company. We had an issue in 1991 December, and we got listed. In those days, it used to take ages to list, and we got listed in April 92, and at the top of the market with a issue price at 45 rupees, which was controller of capital issues, and the listing price at 1200. So it was a huge pop for investors and the risk of getting extremely heady. However, soon the famous security scam really blew up by May 1992, and that saw collapse in the capital markets. But we did not move away from our fundamentals. We kept on building our business on substance, on ensuring that whatever we did was in the interests of all stakeholders, always within the framework of law, and avoiding what would be perceived as an illegal or an unethical practice of any nature. Therefore, that growth continued for us, and we were able to grow at speed. And of course, from a fact that we were 3 people firm in 1985 to now a 75,000 plus people firm is a very exhilarating journey along the way. But here are some of the important learnings which I would like to share with a lot of entrepreneurs as they go down this journey. First, be very clear that being entrepreneurial is not inconsistent with being professional. And therefore, the key to sustainable success is what I would define as a professional entrepreneurship approach. Be an entrepreneur and a professional, which means every entrepreneur must embrace professionalism, and every professional must embrace entrepreneurship. If you get this combination right, it is very, very sustainable and it enables you to be getting creative, doing new stuff, at the same time having processes and systems along the way. Another lesson we at that stage learned was from our joint venture partners. In the 90s, we went into 2 joint ventures. One was with Goldman Sachs and the second one was with Ford Credit. Ford Credit in particular was in the car financing business, which was small ticket business, individual cars. And we learned a lot about systems and processes and the importance of 100 rupees charge or a waiver and putting all those systems and processes in place. Therefore, as you grow, as you get speed, get a consistent focus on systems and processes along the way, because that is normally what lags. And one of the lessons I've learned is that a lot of creative people get their enterprises off the block. Where they face a challenge is sustainability. And it is here that it is crucial for an entrepreneur or a startup founder to sit back and take a view that I will need consciously to put processes in place. And very often when there are tough calls between a business decision versus a control decision, have a little bias to support the control functions in an early growth firm. What happens in an early growth firm is the business people normally have the upper hand compared to the control functions. And it is there the founder has to, or the entrepreneur has to ensure that he gives support to the control functions so that they have a voice. And time in and time out, we have seen that when control functions have not been given a fair voice, we have seen many companies head for trouble. Therefore, getting that balance right between driving business versus the control function is extremely critical. The other major change, and I think that change is something which the startup entrepreneurs are facing much more today than in my times when we started, was the speed of change. And business models change, ability to be able to change business models is extremely critical. And we experienced one such event in 1992 when one fine day, the Reserve Bank of India stopped bill rediscounting by private companies with banks. And overnight, our bill discounting business effectively came to a stop. But we reimagined and re-engineered ourselves to building a more sustainable model. And an income line which was 70 to 80% of our total income in 1992, vanishing overnight, actually built a stronger firm than what we would otherwise have. Therefore, the ability to handle shocks in what appears to be your key business line and being able to adapt your model to change is crucial. Of course, through all this, we come to the issue of governance. I think governance is much more about substance than about form. Unfortunately, in recent times, because many companies have not adhered to the substance of governance, we are getting a lot of form. And the form has come in because fundamentally, the concept of principles-based regulation versus rules-based regulation has given way to more rules-based regulation, because principles-based regulation has been misused by the system in many cases. But I'm still a great believer in substance and spirit over excessive form. And we are today seeing an excess of rules and regulations to the extent that a public listed company or a regulated entity in particular has such a huge overbearing load of compliance and regulation that it does lead to a risk of losing opportunity in the marketplace. And again, here I can talk a bit about the financial services industry. We have the whole fintech world, which is out there in the open. I think that's good competition, but I would only advise that as the startups grow, be cautious, because the tendency at times is being fast and loose with regulation versus what traditional financial players have. And at some point of time, it could bite back. Therefore, get that very important point that there are sectors, particularly regulated sectors, where the burden of regulation is increasing at great speed. And here, I genuinely believe that if India is going to be the startup champion in the world, we need to find a proper balance between ticking the box regulation versus substance of the regulation as we go forward. And we have to be clear, the approach should not be robotic, one size fits all. And especially as enterprise grows, regulation should have the flexibility of adjusting itself to the realities and the facts of the case, rather than a rule-based regulation which has the risk of stifling entrepreneurship. And to the startup world, my advice would be that have an aspiration to grow, to touch the skies, but remember, the walk from planet Earth to infinity comes with many snakes and ladders. Therefore, use the ladders well, but keep in mind along the way there will be snakes, and your ability to spot the snakes early is as crucial. And for me, as a born entrepreneur, I am exhilarated by the startup world's growth and opportunity in transforming India and transforming the world. Therefore, my strong support to the entire startup ecosystem. And I will only mention that keep in mind that you must hasten because there is somebody else who's ready to eat your lunch. But as you hasten, also keep in mind the value of the words hasten slowly, because that is also crucial, especially as you want to come into the public markets and raise capital. And in terms of coming to the markets and raising capital, again, I would strongly advise that have a thorough health checkup of your firm in every which way. By getting an independent governance expert, an investment banker, or a lawyer to do a thorough top to bottom health checkup about how ready you are for coming to the public markets. Premature launches run the risk of accidents along the way. And at the same time, one general advice, please make sure that people who invest in the public issuance of your company have post-listing an opportunity to have sustainable growth in their value rather than just a pop and then a flat or a negative pop at the point of listing. Sustainable growth, compounded annual growth over a long period of time is what will endure to investors, particularly from the startup world. And one other personal advice to many startup entrepreneurs: while you will need capital, you will need venture funding, you will need late stage funding, keep in mind, be very cautious with the preciousness of the equity you own. Once you give it up, you will never get it back easily again. And therefore, if you are truly committed to your startup, protect as much equity as you can as founders, because later on, it will be impossible for you to get it back. With that, Amit and all the other people who are joining on this platform, I wish the whole startup world the very best, especially in the week when the Prime Minister has given the bugle call for supporting and encouraging startups to make India world class. Thank you very much, Amit, and all the other listeners.
Thank you, Uday. There's a lot there for the startup entrepreneurs to digest, right from the value of their capital to how they should deal with regulations to professional behavior, all of which are going to impact the company's culture. Let me kind of ask you one thing which Indians pride themselves on is this whole thing of jugaad, saying that is what enables us to create wealth, that is what enables us to get ahead. I'm sure you would have faced that temptation as well, that look, there is going to be some jugaad. But those who are jugaadus, if I may use the word, find it also a little bit difficult to build trust with their broader set of stakeholders. So can you talk about how did you balance out the thing of being a little bit innovative, thinking a little bit out of the box, versus doing something which will give you trust? Because again, in the business you were in, you had some of the large players at that stage. That was the period which was dominated by the government-owned enterprises. So people would have been a little bit reluctant to kind of turn to a private bank and saying, I'm going to trust you with the money. So just walk me through a little bit of your experience and your thinking and how you operationalized that.
Amit, there is a famous Devdutt Patnaik example of 4 quadrants of business approach. The top right quadrant is what is known as right in letter and spirit, which is popularly known as the Rama quadrant. The top left quadrant is known as right in spirit, but maybe a little unclear in letter, which is the Krishna quadrant. Then you have the lower left quadrant, which is the Duryodhan quadrant, which is right in letter but not in spirit. And what is the 4th extreme right lower quadrant, which is called the Ravan quadrant, which is wrong in letter and wrong in spirit. At Kotak, our our approach through this entire journey has been to be right in letter and spirit, which is the Rama quadrant. But there have been occasions when you had to take the tough calls, and we have always in that case ensured that we are right in spirit. And Krishna is in many ways a symbol of that. Therefore, when you think about Mahabharata, where it was the victory of good over evil, at a crucial point when an arrow was to hit Arjun, Lord Krishna actually dropped the level of the earth by a few inches so that the arrow went above Arjun. We can say this may not necessarily have been the right thing in the letter of the battle, but it was about spirit. And the Krishna quadrant is finally what worked. Therefore, my advice to entrepreneurs is it has to be Ram or Krishna. Don't allow Duryodhan or Ravana to get into your strategies. And think about the whole Mahabharata again. And the thing about Duryodhan, he may have won the game of Chopard or the gamble, but what was apparently right in letter was wrong in spirit. Therefore, keep the principles of spirit as the most important part of how you build your enterprise and govern for the future.
Thank you. Let me kind of move on to, since we got a lot of startups and entrepreneurs here in the audience. The question which they often need to balance out is that how much do they use social media? I know you have used social media, but it's kind of very limited and with the focus on sending a few strong messages across. But that is always not so. So do you have any advice to some of these people in terms of communicating through social media? How should they think about it? What should they not say and what should they say? And do you also think that there is some role for regulators to kind of step in on this?
Yeah, so I think social media is the whole new exciting space. First of all, I think social media has also become the place for business. And why I think its role is dramatically changing. I see, especially in the last couple of years in the COVID period, this has become a very significant instrument of change. So when my wife, Pallavi, goes on to Instagram to get all the best fruits and vegetables and uses Instagram as the medium through which she orders all her food and especially fresh fruits, it tells me the world has changed. And I think we got to recognize that. Therefore, we need to keep in mind the communication of today cannot be like what we have done. Advertising, where an advertising agency makes a pitch for you, creates a creative, thereafter you approve it, thereafter it goes into television or print or whatever it is. In a fast changing world, I think it's getting out of context. You need to be responsive in the present. And therefore, in terms of communication, there are 2 or 3 aspects to it. One is the communication by a firm. In the startup world, I think being very close to the new age media and communication is a different ball game, which we have to embrace. Then you come to the situation about where individual founders and people who stand up for running the enterprise have a broader responsibility. How do they respond to social media? So I have gone on to Twitter. I have been active on Twitter for many years, and I have found it a very effective way of communicating what my thoughts are. I try and handle it with care because you just want to make sure that you don't overstep it. But I have found Twitter to be a very, very efficient and effective medium for me to communicate. Maybe for some other people, Instagram, Facebook, and all those may also be need to be used, including LinkedIn. And therefore, I believe we need to embrace social media, but we also need to be clear. Each aspect of social media has a different way of communication. What you communicate on Twitter versus what you communicate on Insta are very different nature of communications and maybe to different audiences. Therefore, you need to tailor make your communications in this new world, not one size fits all social media, but horses for courses.
Thank you very much. Here's a question from the audience. What they're asking is that the valuation of startups vis-a-vis their financial results and cash burn is very different today than at least when you and I were out selling IPOs in the your firm and our firm were out selling IPOs in the early 90s. And even now, there is a lot of pressure for bankers to kind of go out and quote the highest price, and pressure from the private equity, which is looking at exits, to ask for the highest price. So how do you think the promoters, how should they think about the valuation, and how should they balance what is in the interest of the private equity player at that stage, maybe in the interest of their employees who want a high exit, versus those of the retail investors and other investors who would come in at the time of the IPO?
I'll just give two examples. One is the example of Facebook. Facebook probably got listed more than 10 years ago. I still remember very vividly. Its listing valuation was around $30 billion. And most analysts were saying, where is the revenue model? And Facebook post-listing actually went down. A little more than 10 years later, Facebook, from a $30 billion company listing at below the $30 billion valuation, is now a $1 trillion company. And it was able to, along the way, from being a social networking site for friends, being able to build a business model which created this revenue stream and the revenue engine. Therefore, I think there are many, many cases of a particular business model which is able to attract customers, and over time being able to monetize it effectively to a great revenue model. Therefore, you got to look at each of these startups and ask the tough question: what are the unit economics? What are the potential revenues? How will we get there? And do we have enough ability to sustain it through this period? And markets over time, public markets will get smart in terms of recognizing the right levels of what works and what doesn't work. It is still a very early stage in the Indian listed space of startups getting listed. Therefore, it is under the process of evolution. However, I would also like to bring another point into mind. Last 2 years, many investors assumed near zero interest rates, or maybe 1 or 1.5% long-term rates, was something which will remain forever. Therefore, the present value of cash flows 5 years later is, if it is the same as what it would be 5 years later, then your valuations become very different than when you start pricing the cost of money. I think the cost of money has begun to go up. And should that go up, I think we'll now see the risk pricing and the present value pricing come into valuations of startups. It will also be, as interest rates go up, the hurdle rates which investors will expect as returns from their investments will change. And at some point of time, if rates really rise significantly, then debt becomes a more serious option for institutional investors as well. Therefore, the startup world has to be bracing itself for a time when real interest rates will happen over the next few years. Even today, real interest rates are negative almost everywhere in the world. Therefore, the price of money is one of the most important aspects in pricing equities. It has been considered to be near zero for the last couple of years, but Cinderella times will not last forever. And I think we are not very far away from the clock striking midnight.
That's a word of caution for all of those who are looking at or expecting that the valuations will go only in one direction. And I hope there is some degree of realism which comes to that. From this, let me kind of come back to your bank, Uday, and there were two questions which I have. One is with regard to the corporate culture. How have you gone about ensuring that your culture is what it is, where people are focused on risk, they understand what it is in pricing, in servicing of the customers? And let me kind of use that also to ask another question, and maybe it's some ways linked, but maybe it's completely unlinked. At this moment of time, you're also competing with, at least when you look at the financial services sector, a lot of people who don't have the same set of rules which apply to you, applying to them. And therefore, you and the organization culture, while at one end needs to be extremely conservative to manage the money which has been given to it as a bank and as a fiduciary, but at the same time needs to be agile and compete with in different players in different industries, be it a Zerodha in the broking, be it a Digit or someone in the insurance business, be it another fintech who's looking at giving money to SMEs, etc. So how do you kind of think about organization culture? How do you think about competition from these? Keep the people agile, but at the same time grounded to values which you have over the years shown matter to you?
Amit, there's a very thin line between conviction and foolhardiness, or conviction and being obstinate about change. So we have to be very careful that we are not in the category of being foolhardy or obstinate. There are areas we have to be clear where conviction calls. And there are areas where we need to be clear that change is imminent. And deciphering this is one of the most important aspects for every enterprise. And when I look at Kotak, there are many things which I would say that we need to change. But there are some things we will not change. And getting that balance right is one of the most crucial aspects about our future. Because if we don't change in many areas, for example, our responsiveness, our customer centricity, our ability to embrace technology, our ability to embrace new talent, those are the things where we need to change even more. But there are things like belief in trust, doing the right thing, not cheating minority shareholders, not cheating customers, not cheating employees, being fair with them, being humane, are the categories or characteristics which should not change. And it is a very constant battle about how you bring about change, and in some levels disruptive change in an institution in the area of customer, technology and talent. And it is here change has to be done at speed. The turnaround times in today's world have to be much faster. So keep your values, keep your principles, build trust, which is at the core of who you are. But there are many areas where we have to turn and transform fast. And it is here that we cannot hide ourselves under the cover of being a large firm. The firm has to transform by creating many, many internal startup firms within the firm to be able to be reaching out in the interests of customers and therefore being competitive, and not sitting under the cover that we are a regulated entity and therefore are not responsive to the customers and the marketplace. Change is a must. A speed of change is at great speed, but culture and a few core values do not change with time.
Thank you. Here's a question from someone on the audience. They want your take on, the maturity of the financial sector and its various components, maturity of the banking sector. But given the conversation is about private equity and venture capital, what would your advice to the private equity and the venture capital players be? How should they be thinking about the business, and what path do you think it will go along over the next 4, 5, or 7 years or so?
Private equity and venture capital, whether it's institutions or individuals, has been one of the biggest boons for entrepreneurs, especially in the last 10 years. And it has dramatically supported dreams of people to be able to grow. Therefore, I would really say it is one of the major changes which has supported the startup ecosystem. The issue which I think the private equity and venture capitalists have to ask themselves is, how are they aligning themselves to the long-term interests of the firm they are invested in? And how do they ensure no conflict of interest versus their need to exit at a point of time versus what is right for that company? And whether it's 3, 5, 7 years, when the exit time comes for private equity, whose interests are they obliged to serve? The underlying investee company or maximizing the returns on their investments? And I think mature long-term private equity will look at this more carefully than just maximizing its profits on its exit. And it is here that I would ask the private equity investors to get this this important conflict well resolved, because otherwise the residual investee company faces disproportionate disruption at a point of exit by private equity. But we have to give them credit because they've taken more risks than what many people would have otherwise taken. And in a country like India, where for many, many years, equity did not get its rightful place as a risk asset, this form of capital actually has saved the day for Indian startups.
Thank you. I have a question again from the audience, which is pointing out the fact that most of the startups we see are there in the larger metros. So do you have any advice for both the venture capital and the startup community, and also those who are in the rural area? So do you have some advice for Bharat in this whole startup ecosystem space?
You know what happens, Amit, is ecosystems develop around geographies. Therefore, if you take the power of Bangalore, if you want really good technology talent, the best place in the country by far is Bangalore. But what happens with the technology talent from Bangalore is talent is far more attritive than it is in other parts of the country. Therefore, a Bangalore technology people, a Bangalore technology person, average life with a company is much lower than in many other parts of the country. And I do believe technology talent is now actually growing in different parts of India. And therefore, to startups, I would say take some risk to look at enterprises in geographies beyond Bangalore, Gurgaon, maybe Mumbai and Pune, to other parts of the country, because there is a technology and some of the other key skill talents, maybe at lower costs, maybe more stable. And if you get the right entrepreneurs, you can build a business in different parts of and different geographies. Having said that, if you look at the startups, it is these 3 or 4 cities which have created this culture, and the whole ecosystem has developed around it. So you can't get away from that. It has happened worldwide in a similar manner. But COVID is changing that. And I think COVID is bringing us to a world where geography is history. And we need to be ready for that. One of the main reasons why many startups have had a huge advantage is because you need not have been in so many geographies, but you got the whole market opened up for you because geography became history. So some of these, I think, will evolve. And I don't think we should be closed-minded to look at startups or investments only in major metros.
That was the last question from my side. Thank you very much. I think you've kind of given the audience a lot to chew on, be it in terms of for entrepreneurs building your business, for regulators in terms of the balance between too much and too little regulations, for the private equity as venture capital, as they want to recalibrate the relationship with their investee companies. I'm sure that all of them will take some of these lessons to heart. And with that, let me thank you very much for sharing your ideas and your thoughts with the audience today. Thank you very much, Uday.
Thank you, Amit. And I wish the conference a great success. I see a wonderful lineup after this. I see Sanjeev and Falguni next with Leo. And I wish you a great and a successful conference. Okay. All the best to you for the rest of the day, and goodbye.
Thank you very much. Thank you.